Hey, everybody. Good afternoon from 12-Minute Trading. My name's Doc Severson. I got Dave Lukas here. Today is Monday, the 11th of September, big day. I remember that day 22 years ago like it was yesterday. It seems like a lot longer ago, actually. And the world actually changed quite a bit since that point. If I remember the America from back then versus now, it's like a whole different country. But that's a whole other topic. We're here to talk about markets today. We're seeing a little bit of a rally into Monday. We have an extremely important week right now with CPI and PPI. So this is why, the market's basically, going to try to anticipate through either whisper numbers or leaks or whatever it is, what the inflation numbers are going to be this week with consumer price index and producer price index. So that's retail inflation and wholesale inflation. Those are going to be huge. There's no way, though, that the Fed is going to do anything next week. They're pretty much baked in. They're going to pause. But are we going to hear the same thing? Data dependent, higher for longer, those kind of things. So right now, the market is sick and tired of the Fed raising rates and, is looking for any sign whatsoever, any puff of smoke out of the chimney that we're going to see that. Dave, what are you seeing out in the markets these days?
Well, I'll tell you what, I think today is kind of two things. There was a big Tesla upgrade that hit the tape this morning from Morgan Stanley. I think that's helping drive markets higher. And you got the Apple event tomorrow, I think. So I think that's a little bit of what's driving today. It's a little kind of front loading into the event. Could sell off on that tomorrow some and everything based upon what they do at Apple. I don't know what if there's any really major changes to the iPhone that are game changing.
Ooh,
right?
the iPhone 15, we have a USB-C connector.
I think there's a new camera or something like that. So I don't know. We'll see what they come out with and see if it really moves things. But today could be just kind of front loading into that, and that's kind of I think what's driving markets. And then after tomorrow, it'll turn to the CPI, and PPI, and I think CPI is going to be higher. I mean, oil's up over 30% in the last couple of months. CPI, they're already projecting it to tick higher. And so I do think we're going to see a higher CPI. I don't know by how much. CPI has been coming in under the estimates, usually by like 0.1 under the estimates. So, I think I've heard 3.6. So maybe it comes in at jumping up to 3.5, 3.6. So I think that's just going to solidify the Fed pause, but I think the Fed's going to do the same thing next week that they've been doing. It's going to be data dependent, and we reserve the right to raise rates more if we feel like it, based upon the data. And I think it's going to be interesting as we get into October. Number one, I think CPI is going to continue to go higher, and the next meeting is until November, right? And so they could do another rate hike before the end of the year. But we also have a potential government shutdown coming into place now. And that always has fun and plays havoc on the markets as we, wait with bated breath to see if the government's going to shut down, even though it does every weekend. So we'll have that whole fight with all that stuff going, and that probably will make the back half of September, as usual, somewhat volatile, and who knows what will happen there. I still think we've got to be on guard for a credit event, though. I still think there's too much havoc that has happened in the credit markets. In fact, I saw Saudi Arabia today has reduced its U.S. bond holdings from 184 billion down to 100 billion in just the last few years. And China's at the lowest it's been. Japan is dumping treasuries. So I just think at some point you're going to get some things come to a head with some of the stuff in the bond markets on a larger scale. So that's something that you just got to be on guard for. Don't know if it's imminent, but it's something that I think will eventually, things revert to the mean, and we'll see what happens from there in the coming months, at least.
Hey, so
that's where we're at overall.
Let's have a little fun with this. Before we go any further, for those of you that are watching this live, if you have any questions or if there's anything you want us to review, go for it. Just chat us in, and we're here until the top of the hour. And if you want us to look at something, go for it. Or if you're watching this on a replay, which is going to be most of you, if there's something that you want us to take a look at next week, let us know. Just write in support@12minutetrading.com. Or you can just chat into the comment section here, and we'll pick it up and then talk about it next week. So, Dave, I'm going to bring up the charts here, and I thought what would be kind of fun, because we can go back and look at this, in a few weeks after we have this enormous move one way or the other. And we can kind of map out and say, like, okay, how right were we? Not that we're in the business of predicting the price. We really aren't. But I thought this would be kind of fun to take a look here.
Yeah.
So a month from now, what kind of path do you see the S&P going on? And where do you think it's going to be a month from now?
Well, if you look at the weekly chart, which you got in the center there, do you see how we've got ourselves kind of a sideways triangle happening in that chart?
Absolutely.
That's one of the most challenging patterns in the world because it can break up or it can break down. It's hard to say, oh, a sideways triangle always goes up, it always goes down, versus like an ascending or a descending triangle. So if you're technical, so it's one of those weird places where we've got really a pretty fully charged weekly chart that is just in a position to go either way. And I think it's going to be dependent on some of the things that come out. It's going to be dependent on what the Fed says. It's going to probably be dependent on what happens with, this government, funding bill and all the stuff that's going to happen there. And so I don't think we're going to really know the direction until the beginning of October. I think we're going to go sideways until then as this stuff shakes out, up and down. And then the fourth quarter, that thing's going to release, and that's going to be the trend for the fourth quarter. As of now, I'd have to say higher, right? Because if you look at the markets, we still are above typically the moving average. Like in the if I look at my Bollinger Band setup and we have the moving average, we talked about that before, where that like weekly chart moving average serves as support, and we come right down to it, and that's what we keep doing, and then bouncing off of there. So we've had, at this point, still what looks like just a standard pullback in the midst of a bull market, and that was needed to recharge the charts to get going again higher. So that's, to me, what we're kind of seeing as of now. If we put in the lower low, because we just put in a lower high, right? So if we put in the lower low, that's when you got to start to say, okay, things may be changing polarity, but we haven't seen that yet. So that's kind of where things are, at least in my book. I think we're going, as of now, we're still on a pace to go higher through the end of the year.
Okay, I've got a slightly different take because I do agree that we are very, very susceptible to some kind of credit event because things have been pretty quiet for, quite honestly, things have been really quiet since we had, the bank event back in March. So we had a little bit of an oversold overbought reaction. So a little bit of a haircut, it was overdue. But right now, what I don't sense is that we've achieved escape velocity. So I think I agree with you on just about everything. What I think will happen, and again, this is no basis on anything other than I've seen it happen before, where if too many people are expecting this to break out to the upside, quite often what happens is a magic event will come along, which nobody anticipates. Nobody, nobody was expecting Silicon Valley Bank to fail. And many other things that happened over the past year and a half. A lot of people just did not expect that. What I think may happen is some kind of thing will happen, some kind of event which is not priced in, and we end up dropping out of the pattern temporarily. Now, I don't know whether that's going to bring down to 4,300 or maybe as deep as 4,200. The deeper it goes, the more that trebuchet gets loaded up. And I think what would happen is we'd have such an incredible negative environment, very similar to what happened over here back in the September, October timeframe in 2020. Like, oh no, here we go again. We're going straight back down. We're locking down the economy. And instead what happened is the market ripped off an unbelievable run. And this is what I've seen happen before, is that when everybody sees this drop out of the pattern. So first of all, you create a bull trap. And we're in the process of building one today. We create a bull trap, and maybe we're going to get an okay number or something like that. And then maybe the Fed comes along next week, or maybe it's something in October. But we end up dropping outside of the pattern. Maybe it's that credit event you talked about, which we don't know exactly what it is yet. that will drop
Whatever it
us up.
is, it's going to be something that it can't be priced in, right? It's got to
Right.
come from seemingly left field. A good example, kind of did it to the markets in August was the Moody's downgrade. Just
Oh
out
yeah,
of
yeah.
nowhere, it hits the markets overnight, right? It comes out of nowhere. All of a sudden, the U.S., is downgraded. Bam, right? And so it's something like that. And again, it could be credit. It could be the government, fiasco with the budget. It could be a host of things, right? But it definitely won't be something that's on the radar. That's what's going to drive that down.
So
And if it undercuts that moving average on the weekly chart and puts in a lower high, yeah, you may get a bounce from that, but I don't think you're going to see new highs by the end of the year if that happens.
well, okay. So here's again, we're having some fun here. So if we do end up having a monthly pullback, this would actually create a monthly pullback because you're absolutely 100%. That's a lower high in the weekly chart. So that's a nasty signal. That's a change in polarity to the downside. We'd have all kinds of negativity in this area. And usually when something like that happens, that when you get super negative, when you have things like Brexit show up where nobody expects it and everybody views it as a negative thing, or even to some degree COVID, the same thing happens. This normally marks a significant bottom for several months. So what I would expect is for that to create the ending move here. This will create the ending move into the fourth quarter where we maybe take out 5,000 or something like that. And nobody will believe this rally when it occurs. Everybody will say, well, wait a minute, this doesn't make any sense because it's supposed to be going lower. Everything is crap right now. It's supposed to be going lower. But instead we'll go higher and everybody will be on their back foot trying to catch up to this rally.
I agree. If that happens, there will be a rally off of it. I just don't know if we're going to hit new all-time highs by the end of the year with it, but there will be almost a V bottom rally off that thing. That will be just like rip your face off and people won't expect it. I totally agree.
And the timing would be perfect because this is where we see most of the big moves in the year is October, November timeframe like that.
Quarter.
A lot of this will depend on how negative this gets. If this gets super negative down here, then we could have a hell of a rebound off here. Notice that we never got
energy. You have the energy on the weekly chart for it, for sure. Yeah. I mean, that weekly chart can go 400 or 500 points in a swing. So you've got the energy, and if it pulls back and actually charges the weekly up even more, then, it sets itself up really, really well to do that. I just, if anything, then what that is it's probably the last big move before we get the next major rollover into a recession.
Absolutely. Or right. That becomes the next bull trap because you got to have bull traps that set up the next major downdraft.
Exactly.
And I think we're going to have back-to-back, 22 and 24, we're almost going to have back-to-back bears show up.
I think you're right. I think we're setting up for that.
I don't see any way around it. And it almost has to and this also falls in, and this is actually your specialty here, but it falls into the political arena as well too, because if you remember back in 2008, when did we crash? Right before the damn election. And so everybody's like, oh, to hell with it. All right. So we're gonna vote in the new guy. We're gonna, everything out, everything old is going out. And so it was a complete sweep. I mean, and so we may see something very, very similar, through the back half of 2024, where it just the whole thing crumbles down.
They're going to do everything they can to basically. I mean, an election year leading up, they're going to do everything they can to look at the jobs numbers have been a perfect example. Every month, right? We're getting a jobs number that looks great and it's a B. And then they come back and they revise it lower by half in the following month. Every single jobs number this year has been revised lower at this point, and that's,
how could you be?
I don't know of a time that I've ever seen them off that much. That consistently. Right?
You had one job. You had one job. Hey, my job is to tally up the jobs number. Oh, I'm sorry, I was off by a factor of 50.
Yeah, GDP getting revised lower the way it is. But like now you've got like, I mean, you look at like, what is it? The Atlanta Fed has GDP at like 5+% for this quarter coming up, uh, like there's some really wonky stuff out there, to use a technical term.
But
But yeah,
that's
I,
Atlanta, and the other regions are not
I know
nowhere
they're all
close to
like one or two,
right.
but so somebody's smoking something in Atlanta, I guess. But the I think the bigger thing is like the underlying macros are all really getting they're really slowing down. Things are definitely showing that it's getting unstable. Credit card did an all time high, savings at a getting to almost nothing left. You got some crazy stuff happening in the mortgage markets. In fact, today, I think I read that mortgage applications are down the most since like the lowest since 1993 now. So the housing market's starting to show the signs of blocking up. There's just a lot of things, and it takes a long time for this stuff to work it through the system. I mean, if you look at what we did in COVID, we printed, in the ensuing years, the first couple of years of Biden, over $10 trillion and funneled it into, funneled it into all the big players like BlackRock and all these guys. And that's in the system, unfortunately, each American didn't get a check, right? Which is, it's a shame because of the amount of money that they printed. They could have made everybody a millionaire, but that still has to, filter its way through. And then once it kind of dies out, that's what the shot was. That's the shot, and that's what you get you got the bull market out of, and then it starts to die out, and we've got the rates that we've done up to this point and everything else, and then it just like that fades away, and that sugar high comes off, and then you revert back down to the mean of where you should have been because you never really came out of it, right? You think about it, you didn't really. There's the ways to really make an economy go is you have to be more productive, as a country, right? And you need to live within your means. You need to be having surpluses. We didn't do that. We just threw a bunch of money at the problem and gave it a sugar high, and we've seen what happens. And that money's still being spent. There's still money being spent. We're in a peacetime and no recession, and we're running $2 trillion deficits. I mean, so things are going a lot longer than people think.
Yeah.
And that's kind of the thing. And so eventually we will get a pretty nasty recession from it and stuff. Maybe it's in the election year next year. Maybe it's when the next president takes over. But it's there. The fundamentals are getting weaker and weaker by the day.
Yeah,
so that's just where we stand.
It's a matter of time.
And these market makers will run this thing up into that and then pull the rug on everyone. That happens time and time again. Just think what happened December, January of 2021. Just remember what that looked like, and that kind of blow off move like that looked like. And
I've been doing this for a while, as have you, and it's like every time we get a high like that, it's so difficult to spot the top because I was even looking for it. I was all over it, and it's still nearly impossible to spot the top with any kind of accuracy. I mean, you almost have to be in it several months in advance, if not years in advance. That's the one thing I've learned from, the old bears like Jesse Livermore. And he was actually net short in the 1906 bear market. He was net short and finally got a margin call literally 2 weeks before it finally dumped. And it was, it's so easy I think we lost Dave. Okay, so maybe this is a good time for us to wrap things up. I'll let Dave answer that one if he comes back, because that's my understanding matches what you have as well too. I mean, that's one thing that I worked at a prop shop, and we were basically market makers. Now, you can sort of pull the price in one direction or another. Basically you can widen, spread out, and then that works to that degree. But these days, there's so much liquidity with anything that's being traded that you can't really move it unless people are moving the price themselves. If they're, hitting the bid and landing on the offer, then it's going to move the price in that direction. So I agree. All right, guys. Well, I think we lost Dave, so we're going to wrap it up for today. And we will see you guys next week. So take care and good trading. Don't forget CPI and PPI this week, Wednesday and Thursday. We'll see you guys next Monday. Take care now.